Silver traders and precious metals followers. Today we have a major discussion lined up. Silver has been on a remarkable journey, powering higher, breaking through barriers, and attracting attention across the financial world. But now, the big question stands. Is silver on its way to test the historic $50 mark, or are we facing the possibility of a major shakeout and correction before the next leg higher? In this video, we'll break down the latest analysis, the recurring themes for multiple expert forecasts, and the critical levels every market watcher should be aware of. Stick around, because the next few weeks in silver could be decisive. Let's dive right into what's happening in the silver market right now. The current landscape. Silver, also known by its trading symbol XAGUSD, has recently staged one of the strongest rallies in years. The surge has been fueled by a combination of factors: expectations that the U.S. Federal Reserve will ease interest rates, weakness in the U.S. dollar, and renewed investor interest in precious metals as a hedge against uncertainty. These tailwinds have given silver powerful bullish momentum. And that's why we're hearing forecasts talking about targets near $49 to $50 an ounce. But at the same time, the rally has created a new challenge. Is silver now overextended and too pricey in the short term? Some market analysts suggest the metal could be entering overbought territory, which raises the risk of a temporary pullback.
Themes from expert forecasts. Several consistent themes appear across the latest expert commentary and news coverage. First, the too pricey argument. An FX Empire article recently warned that silver, at levels above $47, could be stretched. Their view was that the market might require a shakeout, essentially a short-term correction before buyers can re-enter at healthier levels. Second, extended breakouts, but signs of being overbought. Other technical studies point out that silver's breakout remains intact, but the price action looks overheated. Momentum indicators suggest a pause or consolidation could be likely in the near term. Third, short-term weakness. A report from FX Street mentioned that silver was recently trading near $33.02 in one contract period, highlighting volatility and the possibility that parts of the silver market are not as strong as the headline rally might suggest. Fourth, bullish momentum and macro support. Despite the warnings, many forecasts remain positive. Analysts argue that as long as the Fed rate cut expectations hold and the US dollar continues to weaken, silver retains room for more upside. In fact, one FX Empire forecast mapped out a bullish path toward $49.81 as long as silver holds above its critical support levels. My assessment of the situation. Here's how I see it when we put all these pieces together. The bias remains bullish in the bigger picture. Silver's upward trend is supported by fundamental macro forces. Monetary easing cycles, weakness in the dollar, and demand for hard assets all align in silver's favor. But short-term risks of a correction are high. Overbought technicals, stretched valuations, and the possibility of surprise economic data could easily cause silver to retrace. That doesn't necessarily mean the end of the trend. More likely, it would be a pause or reset before another advance. A pullback may be healthy. Corrections in strong bull markets often serve as opportunities to form stronger bases. If silver dips back into its key support zones but manages to hold them, it would strengthen the long-term bullish case. Price forecast scenarios. So what are the potential paths silver might take in the coming weeks and months? Let's look at three major scenarios. Scenario 1. Continuation of the breakout. If momentum and macro factors remain favorable, silver could extend its rally toward $48.50 to $50 an ounce. In this case, pullbacks might only be shallow, finding support near $44 to $46. Scenario 2. Moderate correction or shakeout. If the rally cools down, silver could retest its earlier support regions. This might mean a dip into the $44 to $46 zone, or even a test of the $42 to $44 range. This scenario would align with the too pricey argument, suggesting that buyers may need better entry points before pushing prices higher again. Scenario 3. A deeper drop or reversal. If macro conditions change dramatically, such as stronger U.S. economic data, a pause in Fed easing expectations, or a surge in global risk aversion, silver could face a steeper decline. In that case, prices could slide toward the $40 zone, with $38 to $40 becoming the critical region to watch. Key levels on the chart. From a technical perspective, here are the levels that matter most. Support at $44 to $45. If silver dips here and holds, it could reestablish bullish momentum. Resistance at $48.50 to $50. A convincing breakout above this ceiling would likely unleash another wave of buying. Support at $42 to $44. If tested, this zone would reveal whether bulls remain in control or if sellers are gaining ground. Macro drivers to watch. The path silver takes won't be determined only by charts. Global macroeconomic factors are just as important. Federal Reserve policy. If the Fed moves forward with interest rate cuts, silver may continue benefiting. Conversely, if cuts are delayed, momentum could weaken. U.S. dollar trends. Silver typically moves inversely to the dollar. A weaker dollar supports higher silver prices, while dollar strength weighs against it. Inflation and economic data. Inflation surprises, job market reports, and GDP figures all play into how investors view precious metals as a hedge against uncertainty. Gold's performance. Silver often follows gold's lead. If gold continues to rally strongly, silver usually benefits. Sentiment and investor psychology. Another layer to consider is sentiment. Silver has the reputation as a volatile cousin of gold, often moving faster in both directions. Investor enthusiasm can push prices sharply higher, but sudden shifts in sentiment can also lead to steep pullbacks. That's why periods of consolidation after big rallies are normal and often necessary. Putting this all together, the outlook for silver remains cautiously optimistic. The long-term trend is bullish, supported by macro conditions, but the short-term risk of a correction is real. Whether silver reaches $50 before another pullback, or whether it needs to cool off first, will depend heavily on how the next few weeks of economic data and central bank policy play out. Disclaimer: this video is created for informational and educational purposes only. It is not financial advice, investment advice, or a recommendation to buy or sell any asset. All analysis presented here is based on publicly available information and market commentary at the time of recording. Trading and investing in precious metals and financial markets involve risk, and prices can be highly volatile. Always do your own research and consult with a licensed financial professional before making any decisions.